Good morning, students. Good morning to all. On last class, we have studied about the credit control measures by the Reserve Bank of India. So today also just we will remind about the credit control measures, and after that we will go to the next concept. Credit control measures. So already we have studied about the problems of more money supply and some of the drawbacks of inflations and deflations situations. So because of that, so the Reserve Bank of India have to control the credit facilities provided by the Reserve Bank of India and the commercial banks also. So we have studied the many problems of credit facilities provided by the commercial banks. So the Reserve Bank of India must be taking the actions to controlling the credits. And not only that, the credit control is the primary mechanism available to the central banks to realize the objectives of monetary management. So whenever the credit facility is increasing by the Reserve Bank of India and the commercial banks, so all the entrepreneurs will have the power to borrow the money from commercial banks. Because of that, he will be established in any of the industries. But even though if there is more advantages, some of the disadvantages also will be appears, and it will be bring the more harmful effects in the economy. So the Reserve Bank of India also having one of the objective to controlling the credits. So it will be taking some of the credit control measures. The RBI is much better placed than many of the credit control. The statutory basis for the control of the credit system by the Reserve Bank of India embodied in the Reserve Bank of Indian Act 1934. And commonly, so the two type of the credit control measures is handled by the Reserve Bank of India. First one is quantitative or general method. Next one is qualitative or selective method. Quantitative means the quantity of credit must be reduced. So what are the tools are there to reducing the credit by the way of quantity of credit called is quantitative or some general method. So in this quantitative method, the first one of the tools is bank rate policy. The bank rate is the rate at which the central bank of a country is prepared to rediscount the first class securities. So otherwise, just simply we can understand the bank rate is the rate in which the central bank will provide the financial to the commercial banks, or the Reserve Bank of India will be determining the bank rate. So many of the commercial banks are providing the finance to the entrepreneurs and the publics, but in which ratio the RBI is guiding on this ratio only, the Reserve Bank of the commercial banks must be provide the finance to the entrepreneurs. So it means the bank is prepared to advance loans on approved securities to its members bank. As the central bank is only the lender of the last resort, the bank rate normally higher than the market rate. So the Reserve Bank of India will be determining the bank rate. So by determining the bank rate, so the commercial banks also will be have the limitations to providing the finance to the entrepreneurs and others. If the central bank wants to control credit, it will raise the bank rate. As a result, the deposit rate and other lending rates in the money market will go up. So the borrowing will be discouraged and will lead to contraction of credit and vice versa. Suppose in the inflation time, if the Reserve Bank of India wants to reduce the credits, So the Reserve Bank of India will be increasing the bank rate for the commercial banks. So because of that, so the lending power will be decreased to the commercial banks. So the commercial banks will not able to provide them more finance to the entrepreneurs. So this is the first one of the policies, the bank rate policies. By determining the bank rate, so the lending capacity will be reduced. Next, open market operations. So open market operations mean the central bank starts the purchase and the sale of government securities in the money market. Already we have studied on behalf of the government, the Reserve Bank of India only will be sell and purchase the securities and debentures. So on the basis of the inflation and deflation time, so it will be sell and pay. If the Reserve Bank of India want to reduce the credit, so the Reserve Bank of India will be doing the sales and purchase. The central bank purchases and sells not only the government securities but also other proper eligible securities like bills and securities of private concerns. So some of the securities of the private organizations also will be sold by the Reserve Bank of India only. When the banks and the private individuals purchase these securities, they have to make payments for these securities to the central bank. Normally, inflation time, the central bank will sell the securities. When it is doing like so, the entrepreneurs and public also have to pay the amount to the central bank. And the money supply and the availability of money or the circulation of money among the public will be reduced. And the controversy in the deflation time, so the central bank will purchase the securities from the public. Then when it is doing like so, so the central bank have to pay to the public. Then the circulation of money will be increased. Okay, so normally if the Reserve Bank of India want to reduce the credit facilities or the credit amount, so it will be sell the securities. Next, variable reserve ratio. So the cash reserve ratio and the statutory liquidity ratio. So under the cash reserve ratio, the central bank controls credit by changing the cash reserves. For example, if the commercial banks have excessive cash reserves on the basis of which they are creating too much of credit, this will be harmful for the larger interest of the economy. So it will raise the cash reserve ratio, which the commercial banks are required to maintain with the central bank. Already we have studied some of the amount is held by the Reserve Bank of India on behalf of the commercial bank. So every commercial banks must be submit some amount of the money in the form of cash as a reserve. So this reserve amount will be changed by the Reserve Bank of India. So if the Reserve Bank of India want to reduce the credit amount, so the Reserve Bank of India will be increasing the reserve ratios. Next is statutory liquidity ratio. The statutory liquidity ratio is the amount which a bank has to maintain in the form of cash, gold, and approved securities. The quantum is specified as some percentage of the total demand and time liabilities. The bank which are payable on demand anytime. So like that, the commercial bank, all the commercial bank must be submit some amount of the money in the form of cash, gold, and some of the matured securities. So normally the commercial bank also having the lending power by providing the cash and gold only. But if the Reserve Bank of India want to reduce the credit facilities, the statutory liquidity ratio also will be increased. So because of that, the lending power of the commercial bank will be reduced. So by these three quantitative method, the Reserve Bank of India can control the credit amount. So the bank rate policy, open market operation, and the variable reserve ratio. So by increasing these three ratios, so the Reserve Bank of India can control the credit in the economy. Next, qualitative method. Qualitative method is the selective methods are directed towards the diversion of credit into particular resources or channels in the economy. In some methods, by handling some of the method, the Reserve Bank of India will be controlling the credit facilities. So because of that, the credit facilities will be converted into the useful things. So their objective is mainly to control and regulate the flow of credit into a particular industries or business. For example, now which are the industries are having the more crucial demand, so for that industries only it will be moving, and some of the industries just only functioning without any profit mean, so the Reserve Bank of India may convert the credit facilities. The following are the frequent methods of credit control under the selective method. First one is the rationing of credit. Under the qualitative method, first the Central Bank of India, the Reserve Bank of India, you have one of the rationing of credit. The rationing of credit is one of the oldest method of credit control. The rationing of credit as an instrument of credit control, it was first used by the Bank of England by the end of the 18th century. It aims to control and regulate the purposes for which credit is granted by commercial banks. By scheduling some of the important or highly demanded industries, only will get the credit facilities. And whichever industries are issuing or having the matured or the reasonable securities, for them all only the credit facilities will be moving. So the rationing of credit, we have the two types. First one is the variable portfolio ceilings. Here, in which the central bank fixes ceiling or maximum amount of loans and advances for every commercial banks. Some of the amount or the lending capacity of commercial bank is reduced by fixing the portfolio. The commercial bank also will reduce the lending powers. Next, the variable capital assets ratio. It refers to the system by which the central bank fixes the ratio which the capital of the commercial bank should have to the total assets of the bank. So all the commercial banks must be having the minimum capital assets. So because of that also we can bring the control of credit. Next, direct actions. Some of the direct actions of Reserve Bank of India also the credit will come to one control. The central bank may refuse the altogether grant discounting facilities to such banks. The central bank, by refusing the permissions to providing the loans for the entrepreneurs, so it will come to control. Next, the central bank may refuse to sanctions further financial accommodations to a bank whose existing borrowing are found to be in excess of its capital and reserves. So by refusing the further lending capacity to the commercial banks. So the commercial banks will reduce the lending powers. Next, the central bank may start charging panel rate of interest on money borrowed by a bank beyond the prescribed limit. By fixing the prescribed limitations, the every entrepreneurs also will have some of the limitations to borrow the money, and every commercial bank also will have some of the limitations to lending the finance to the entrepreneurs and the public also. Next, moral suicide. So this method is frequently adopted by the central bank to exercise control over the commercial banks. Under this method, central bank gives some advice, then request to control the credit. So it will be explaining the economic situations to the commercial banks and the board of directors of the commercial banks. Under the method, central banks give some advice and the request and pursues the commercial banks to cooperate with the central bank in implementing its credit policies. So always whenever the Reserve Bank of India bringing the credit control measures, so it will be asked to the commercial banks to cooperate with them. So by understanding the credit control measures of the Reserve Bank of India, so the commercial banks also will going to support. Next, publicity. The central bank, in order to make the policy successful, take the course of the medium of publicity. A policy will be effectively successful only when an effective public opinion is created in its favor. So normally the Reserve Bank of India will be published or noticed all the policies, credit control policies to the public as directly. So in this way, the Reserve Bank of India must be induce the people to reduce the unnecessary spendings or unnecessary expenditures or any method. If the government wants to try to reduce the renting purpose, it's called publicity. By publishing the all the things related to the controlling measures, credit controlling measures, so it will try to controlling the credit. Next, regulations of consumer credit. The down payment is raised and the number of installments reduced for the credit sale. So many of the entrepreneurs and all the sellers, retailers and wholesalers also will be sold the commodities by the way of credit. So because of that, the credit installment also will be very higher. Like that, the commercial banks also providing the home loans and some of the advances with the installment payment. So the number of installment and the time of installment, the amount of installment is reduced. So the public and the entrepreneurs also will lose the interest to borrow the money. So in this way also the Reserve Bank of India will control the credits. Next, changes in the marginal requirements on security loans. The system is mostly followed in USA. Under the system, the Board of Governors on the Federal Reserve System has been given the power to prescribe margin requirements for the purpose of preventing an excessive use of credit for the stock exchange speculations. Normally, by the way of speculative motive, many of the people are investing on the shares, and many of them will make more spending to consuming any of the commodities, and sometimes the people will borrow more money to the commercial banks only by the speculative motive. So the government, the Reserve Bank of India is So the Reserve Bank of India will taking some of the action to preventing an excessive use of credit for stock exchange speculations. So because of that also the credit will come to an control. Next, the Reserve Bank of India and the rural credit. So in a developing economy like India, the central bank of the country cannot confine itself to the monetary regulations only, and it is expected that it should take part in development function in all sectors, especially in the agricultural and industry, because the agricultural and the industries also is developing towards us altogether. So the Reserve Bank of India also give the more importance to the agricultural sector. The role of RBI in agricultural credit. So the Reserve Bank of India has been playing a very vital role in the provisions of agricultural finance in the country. So the bank's responsibility in this field had been increased due to the predominance of agriculture in Indian economy. Normally the 40% of GDP is coming from the agricultural sectors. So in order to fulfill important role effectively, the RBI set up a separate agricultural credit department. However, the volume of informal loans has not declined insufficiently. So whenever the agriculturist peoples being in the need of financial facilities to improve the agriculture, so the RBI also have set one of the agricultural credit department separately. Next, the functions of agricultural credit department. So what are the functions are there in agricultural credit department? So first, to maintain an expert staff to study all questions on agricultural credit. So the agricultural credit department also will be analyze more questions related to the agricultural credit. So it will be maintain the expert staff. Next, to provide expert advice to central banks and state government, the state cooperative banks and other banks are activities. The Reserve Bank of India also established the cooperative banks and other banking activities to provide the expert advice to the agriculturalists and some of the agriculturist peoples. Next, to finance the rural sector through eligible institutions engaged in the business of agricultural credit and to coordinate their activity. So many of the rural people also will be in the need of credit facilities. So that the Reserve Bank of India also established the rural credit banks. The duties of Reserve Bank of India in agricultural credit were much restricted, as it had to function only in an ex-officio capacity, being the central bank of the country. It could not lend directly to the farmers, but the supply of rural credit was done through the mechanism of free finance with the institutions specializing in rural credit. So whenever the agriculturists are being in the need of finance to improve their agriculturists, so the agricultural credit department will providing or will lending some of the financial facilities. So the primary societies may borrow from central cooperative bank and the later may borrow from the apex or the state cooperative bank, which in its turn might get accommodation facilities from the RBI. The RBI was providing medium-term loans also for a period exceeding 15 months to 5 years for reclamation of land, construction of irrigation works, purchase of machineries, etc. If the farmers want to purchase any of the machineries, tractors, they have to provide the long-term loans. It will be exceeding the 15 months to 5 years. The Reserve Bank of India was also providing the long-term loans to finance permanent changes in land and also for the redemption of the old debts. So many of the rural peoples also affecting in more debts. So the Reserve Bank of India also just provide the facilities to redemption of the old debts. Next, the Agricultural Refinance Development Corporations. Simply, it will called as ARDs. The farmers in India require mainly medium-term and long-term loans only, but face a lot of difficulties in getting them. So many of the peoples in rural side are dependently in the mostly in the agriculturist. So they need long-term loan and the medium-time loan. So the agricultural finance development corporations also provide the long-term and medium-term loan to the farmers with the aim of bridging the gap in agricultural finance and to extend the credit for projects involving agricultural development and organizations called the Agricultural Refinance Development Corporations. Okay, students, it's enough, I think. If you have any doubt, please ask me. So today we have studied the qualitative or selective method of credit controls and some of the introduction of ARDC, the Agricultural Refinance and Development Corporations. If you have any doubt, please ask me, and just to study your study portions, qualitative as a selective method credit controls. Okay, students, thank you.